My next guest is someone who's a very dear friend, someone who the deep state despises, and someone who is who provides a saver for you once a month as he comes on this show and on this platform. He provides you information you will never see, hear, read, or experience in the bought-off lamestream fake media because he is dedicated to your freedom and your economic and financial freedom at that. Rob Kirby was born in Halifax, Nova Scotia. He received his post-secondary education at the Great York University in economics in Toronto. When he finished his degree, he went to work in the financial district in Toronto called Bay Street, which is the equivalent of Wall Street in the United States. Rob worked on an institutional trading desk. He also worked as an international interdealer broker of foreign exchange and interest rate products. Rob then started writing on economic issues and was involved in a number of entrepreneurial pursuits, easy for me to say. And Rob now focuses his efforts in writing about the markets and on his book From a Gold Bug's Point of View. I encourage you to go to his website, chock full of fantastic information, Kirby, K-A-R-B-Y, KirbyAnalytics.com. It's my pleasure to welcome back my friend, Rob Kirby. Rob, welcome back to the Operation Freedom platform.
Absolute pleasure to be with you again, Dave.
So, Rob, the bought-off lamestream fake media, the Stuart Varneys of the world on Fox Business News and the tools on CNBS and in Bloomberg and Reuters, they tell us the economy in the United States is fine. It's humming along. It's perfect. Well, then riddle me this, Rob, this week. Services surveys signal stagflation as firms increasingly, quote, pass on higher costs to clients, end quote. Spoke to a friend of mine over the weekend who's in the building industry, and he's been talking to me about the prices of lumber, PVC, copper wiring, you name it. It is all. As he said, David, if we go back a year, these prices were 100 to 150% lower in cost as they are right now. Your take, Rob?
Well, my take, let's just say what we experience in the real world relative to what we're told by officialdom. Officialdom basically tells us there is either no inflation or any inflation we do see is transitory. And 150% price increases in vital commodities like lumber, whether it's wheat, whether it's sugar, whether it's corn, whether it's soybeans, whether it's insurance premiums, it behooves me, and it casts a pall over the nonsensical bluster that we're given by officialdom that there is no inflation or that it's transitory. The inflation that we're witnessing is because too much money is being printed in digital form. Too many digital units are being thrown. It's like chum in the water, literally, when you want to attract sea life. And the amount of chum that's in the water right now has very likely, at least in my mind, created something that will be much, much bigger than transitory inflation. But it's amazing the camouflage that officialdom likes to cast on the rank monetary debasement that's really occurring, because they have many ways through things called hedonic adjustments when they measure inflation, where they basically do their very level best, Dave, to exclude anything that goes up in price. They try to let's just say use a very, very sharp-edged scalpel to cut those things out of the inflation equation. And I guess really at the end of the day, Dave, if you never measure anything that goes up in price, you won't have any inflation.
True. And the one thing they say is just booming. Employment. In fact, we just had the employment numbers through the Bureau of Labor Statistics, if that's what you want to call it. And they were saying, there's going to be at least 650,000 new jobs this month in the United States. And the whisper number, Rob, was over 1 million new jobs. Yep. Well, the number came in, Rob, it didn't hit 1 million, didn't hit 650,000. It came in at 559,000 jobs, and of those, 218 jobs were bogus jobs. They were added through the birth-death model.
Yeah, that's another one of their hedonic measures or adjustments that they make to the raw data, Dave. They build in a whole bunch of assumptions that, I mean, are bewildering to me. I mean, when you can fabricate out of thin air 200,000 jobs, I mean the jobs that they actually count as existing is really no more meaningful or no more real than the money they create out of thin air, Dave. It's a few keystrokes and boom, here you go. Here's 200,000 jobs. So if you back the 200,000 jobs out that they falsely or hedonically added to the total, you know, they had a miss probably of something in the magnitude of 370,000 jobs. Well, that's a pretty big miss.
It's a huge miss. It's a huge miss. And then, Rob, let's talk about the dollar. Something you've talked about for years. And this story will never, or this piece of information will never make it to the Stuart Varneys on Fox Business News or the CNBS crowd or this. Russia's $186 billion sovereign wealth fund.
You're not going to raise the conspiracy theory of Russia again, Dave.
Dumps all dollar assets.
Well, I mean, isn't it incredible? It was very interesting. I've had people suggest to me through the past week, people that feed me data regarding the size of the Fed's balance sheet and commentary about the growth in the Fed's balance sheet. And you see, I say to them when they tell me that the Fed's balance sheet is becoming seriously too big and becoming too big an issue. And my typical response is, listen, if the powers that be are that concerned about the size of the Fed's balance sheet, I am more than certain in my own mind that the Exchange Stabilization Fund, a secretive adjunct of the U.S. Treasury that produces no financials and is accountable to no one, which is actually really controlled these days by the intelligence establishment, but that entity, I believe, has enough assets hidden from view that they could monetize the entire Fed balance sheet and take the Fed's balance sheet down to zero, and they could just tuck all of that into the Exchange Stabilization Fund, period, end of story. And you know what? They could do the same thing with the European Central Bank's balance sheet and every other central bank in the world. They could buy all their assets, because I'm of the belief that the Exchange Stabilization Fund is the repository of many, many, many tens of trillions of off-book dollars. And people, and I know, Dave, there's some people that would be laughing about this and saying that I'm either stoned on drugs or I'm drunk. But let me tell you, I follow the work of Catherine Fitz and Dr. Mark Skidmore. Right. And Dr. Mark Skidmore, his latest sort of annual workup that he did on the Social Security Trust Fund edifice in America. And in that 1 year that he examined, okay, and Dave, there'd be some people saying, "Oh, Kirby's going to talk about the 21 missing trillion." No. I'm not talking about that 21 trillion, because that 21 trillion went missing between the years 1998 and 2015, when the government basically then introduced FASB 56, which basically meant that they get a holiday from reporting accurately in their books. But the Social Security Trust Fund is a little bit of a different animal. And in the latest year, where Skidmore and his PhD staff did work on the Social Security Trust Fund edifice, you know, the Social Security Trust Fund has roughly $400 billion in investable assets. These are retirement assets that are slated to pay retirement benefits to people, the baby boomers in particular, as they retire. Well, that $400 billion asset base in the last year that Skidmore did his work, that had a churn or a turnover in 1 year of over $44 trillion.
Oh.
So, you see, like, I lose it when I see or hear stuff like that, because to me that is a giant neon sign screaming fraud. And, Dr. Skidmore won't come out and use the language I use. He knows it's not right. And he tries to go through it through the politically correct path of using FOIA requests and official means of communication with the government. But they stonewall him, and they can't give him any adequate explanation as to why there would be such a churn. And I'm going to say the numbers again in case people think I'm mixing B's as in billions with T's as in trillions. I'm talking about $400 billion worth of investable retirement assets with a turnover in one calendar year of over $44 trillion. Global GDP is less than, I think, 59 trillion or thereabouts?
Mm-hmm.
These guys are turning over. And to be honest with you, and people say, well, Kirby, give me some explanation what they're doing. I don't need an explanation of what they're doing. The number alone is too big. It's too big, and it's a neon sign for fraud. So, you see, that's highly, highly, highly supportive of my claim, at least in my world. That's highly supportive of my claim that the Exchange Stabilization Fund, because that's the likely repository of all this massive financial fraud, and that is very, very supportive of my notion that the Exchange Stabilization Fund could probably monetize the entire Fed balance sheet and say, and just tell the rest of the world, if you guys want to sell anything, we're still bid.
So, Rob, in decades and decades gone by, when there's fraud in the financial system, the foundation of precious metals always seems to hold the line, if you will, for people that had invested or used as an insurance policy gold and silver. So in your work, in your analysis, where are we right now in the gold and silver markets?
We are in the late autumn, and will soon be in the winter of our financial discontent. This game is very, very long in the tooth. The inflation that officialdom tells us is transitory and or non-existent is not being permitted to express itself where it historically would, which would be a dramatic rise in the price of precious metals. And the reason it's not doing that is because we have regulators that don't regulate, and they allow the literal naked selling of infinite amounts of futures contracts, which are promises of metal that either doesn't exist or will never exist. But you see, the debasement of the money is expressing itself in other ways because its traditional manifestations are not allowed to occur. And that's why, Dave, we have cryptocurrencies at the levels they are. That is why we have real estate prices at record highs. And that is why also, despite the fact that half of our economy is effectively shuttered, at least I know here in Canada, at least half of it is or more, and in America, a lot of the economy is still suppressed just through arbitrary layoffs and the shuttering of the economy due to this convenient COVID issue. These things are going ballistically up. Now, Dave, from a common sense standpoint, you see, I'm going to harken back to Economics 101 that I took at the Great York University, which is a bit of an overstatement in itself. But let me just say, in Economics 101, they would tell you that if you shuttered half of the economy, you would not have equity prices at all-time record highs. Mm-hmm. But that's indeed what we have.
Right.
Okay? And commodity prices are, using some market lingo, commodity prices are on wheels. Commodity prices are going up. There are shortages. They're also in conjunction with the shuttering of the economy, as I spoke of. We have supply chain interruptions. And so a lot of people are trying to use that as an excuse to say, well, it's not really because they're printing too much money. It's because the lockdowns have created supply chain interruptions, and that's why the price of lumber is going up. For instance, they'll try to write it off to that. But you know what, Dave? If that's true, then equity prices shouldn't be at all-time highs. So you see, these are people that like to talk out of both sides of their mouth at the same time. And you can usually tell when somebody's talking out of both sides of their mouth, because what comes out is excrement. And it's very sad that officialdom and the people who control the monetary apparatus would treat us and assume that we are that gullible and that stupid that we would believe their guff. And it's really, really sad.
Rob, folks, we're speaking with Rob Kirby, KirbyAnalytics.com, K-A-R-B-Y, KirbyAnalytics.com. Rob, at the end of June of 2021 here, June 28th, I believe, this Basel III is going to go into effect. Educate our listeners on Basel III, and many people believe this is going to be an event that could limit the paper shenanigans that you outlined before in the precious metals arena that the globalists have been involved with for decades.
Well, the notion, the elevator version of what this Basel III is supposed to be about is that unallocated gold, and this speaks to when I talk about gold that's being sold doesn't exist, or will never exist. These promises of precious metal that aren't physical in nature, as in, if I buy an ounce of gold from you, Dave, I give you $1,900 or $1,950 or whatever the price is, and you give me a 1 ounce gold coin. That's called a physical transaction.
Correct.
And that would be called allocated. That's an allocated gold trade. I give you the money, you give me the metal.
Right.
So, but the vast, overwhelming majority of trade in precious metals in the world is not done on an allocated basis, where it's cash for physical. The vast majority of the trade that occurs in precious metals, it's called unallocated. And that's where you promise me, you say, Rob, you give me your money today. I think there was a cartoon about this once. I think if you give me a bowl of soup today, I would happily pay you next Tuesday. Right. Well, unallocated metal trade is on that basis. And banks don't have to take those unallocated metals trades onto their balance sheet. Basel is supposed to do away with the notion of banks being able to effectively hide the promises they've made to people of metal, where they have to bring it onto their balance sheet. And basically it almost turns the metals market hypothetically, into a cash and carry market. So my reaction or my comeback to that, I don't believe it's going to happen to begin with, because in my view, if officialdom enforces the rules as they've posed them, it would be much like a dog chewing its own tail off. And right. I used this analogy with someone recently, and I said to them, because they asked me that direct question, what do you think about the Basel III proposals that are going to become live? And I said, well, that would be tantamount to a dog chewing its tail off. And while I'm never going to say a dog couldn't chew its tail off, I have never witnessed it once in my life.
Neither have I.
So I don't think it's going to happen. And the way, in my view, it won't happen is they'll bring in the rules and they'll say this is for any new player coming into the gold market, but they'll grandfather the old players. And these kind of shenanigans go on time and time again. You see, back in 1934, Dave, we had the Gold Act, where the gold was confiscated from the people, and they brought in there was a new piece of legislation that came into existence at that time when they confiscated the gold. They had a new rule that said if it's in the case of national interest or national emergency or national security, we now have the right to grant companies the ability to not report their true financial condition accurately. So they basically gave anybody who they wish to extend this to the ability to lie and cheat and steal. Mm-hmm. You see, and these are the little provisions. So so I guess really summing it up, my reply is what's going to happen inevitably with this Basel III. They'll likely introduce something that they'll call Basel III, but it'll be in the fine print, in the fine details, how they have workarounds for this and how certain institutions, as in the huge derivative houses and the big bullion players, will be granted waivers or will be granted exemptions, and they'll say it's grandfathering, and they'll make it sound like it's for the best for everyone. And sure as God made little green apples, that's what's going to happen. I
wish I could argue with you, Rob, but I think you're absolutely right.
So
they pull that tablecloth underneath the plates every time. Rob, educate our listeners on how they can follow you on a daily basis, because it's a must-do situation.
Well, you can catch me on the web at kirbyanalytics.com and through other fine platforms like Dave's Operation Freedom.